Hey everyone, Daniel here and welcome back to another video. Here today, we gotta go through the Tattooed Chef, which just went ahead and released their Q1 2021 financial results. In this video, we're gonna be talking about three main things. One, exactly what the company reported from a revenue basis and what was said during the actual report. Next, we're going to go through the company's conference call, and I'm going to give you guys some highlights as to exactly what was said during both the regular segment and the question and answers portion. Lastly, we're going to go through what I'm doing with the Tattooed Chef, if I'm buying, selling, holding, and my plans for it going forwards after this earnings release. So if you enjoy these videos, please consider subscribing and let's get into it, guys. So first and foremost, we have a statement here by the CEO of Tattooed Chef, Sam Galletti. Branded revenue increased 105% in the first quarter across the mass, club, and grocery channels, driven by successful product launches, increased distribution, and a promotion at a large club chain. Big news. What we're seeing is a massive increase in the total branded sales as a proportion of their revenue, growing obviously 105% year over year. When we talk about the Tattooed Chef, they have two main segments of their business. One, branded sales, that's the Tattooed Chef brand that we all know. But they also have private label. This is them creating products for other companies like Costco under potentially the Kirkland brand. The future of the Tattooed Chef is in branded sales. So seeing this increase rapidly in comparison to something like their branded product, or rather private label products, is very good and makes me optimistic going forwards. Now, next thing we got to talk about is them executing on their growth strategy to increase distribution, build brand awareness, expand manufacturing capabilities, and diversify our product portfolio through innovation. Those are the main things they're planning on doing to continue growing as a business. Obviously, increasing distribution to new retailers, new stores, building brand awareness through their advertisements. Well, I'll give you guys my thoughts on that in a second here. Expand manufacturing capabilities, obviously currently in their California facility, their Italy facility, and with the recent acquisition of New Mexico Foods, and obviously diversifying their product portfolio through new product launches. We're investing in the business today in order to support strong long-term growth. And we believe the recently announced acquisition of Foods of New Mexico will help create meaningful shareholder value going forwards. So obviously, like a majority of growth companies out there, the Tattooed Chef isn't that profitable at this moment in time because they're investing in growth, and that's completely fine. They're setting themselves very up for long-term growth and profitability down the road once they start to transition into a more of a value phase or value style company. Now, what's very interesting here, we have a pipeline of over 250 plant-based innovation ideas, including ambient products and snacks. That's huge. This opens up the total addressable market for the Tattooed Chef in a massive, massive way. Obviously, the freezer section, or the freezer kind of market, the total addressable market, is big, with over $50 billion in market size in the United States alone. But kind of expanding into refrigerated items and refrigerated products, along with snacks, opens up that total addressable market significantly into other sectors and potentially more profitable sectors like the snack space. Now, next thing we got to go through here is exactly what was released. Now, I'm just going to give you guys some highlights here, and then we got to go more in depth into both revenue, gross profit, and net income. So revenue was $52.7 million, a 59% increase compared to $33.2 million in the prior year period. Tattooed Chef branded product revenue was a record $36 million, an increase of 105% compared to $17.6 million in the prior year period. First and foremost, this is phenomenal revenue growth, and this beat analyst expectations of, from my understanding, anywhere from $45 to $46 million, right around a 15% beat on the top line. Phenomenal growth and phenomenal execution on the part of management from the Tattooed Chef to really beat analyst expectations. We also saw that increase of branded sales like we talked about. Next thing here is gross profit, and I highlighted this in yellow here. Gross profit was $13.7 million. Or 26% gross margins. Phenomenal. Compared to $9.2 million or 28% gross margins in the prior year period. Now, one thing that we have to understand is the Tattooed Chef, their margins tend to jump around, and we'll talk about this in a second here, but because of these margins jumping around, there are quarters that are somewhat outliers in the sense of gross margins, where sometimes it's a little higher than usual, sometimes it's a little bit lower than usual, but we'll talk about what their guidance is for gross margins in a moment. Next, a net loss was $7.9 million compared to net income of $6 million in the prior year period. Adjusted EBITDA, following that net loss of $3 million compared to adjusted EBITDA of positive $7 million in the prior year period. Looking at this, obviously they incurred some one-time expenses. We'll take a look at exactly why they reported a loss in a moment. First and foremost, gross margin in the 3 months ended March 31st, 2021 decreased compared to the prior year period. However, on a sequential basis, first quarter gross margin increased 8.6% compared to 17.4% in the fourth quarter of 2020 due to increased operational efficiencies. So obviously, we know that the company as a whole jumps around when it comes to their gross margins, and we see this here. But first and foremost, it's good to know that they're actually improving on a quarter-over-quarter basis, despite the acquisition of obviously New Mexico Foods, and we'll see what happens with this going forwards. They do expect a sequential increase in gross margins, or rather a stabilization of gross margins going forwards in the 20 to 25% range, what they're guiding for this year. Obviously, that will expand significantly over the coming years to over 35%. Next, operating expenses increased $18.3 million to $20.7 million in the 3 months ended March 31st. Compared to $2.4 million a year ago. $3.2 million of stock-based compensation. This is part of the reason as to why this was so high. $2.6 million in marketing. $2.6 million in public company and new employees cost. And $1.9 million in promotional expenses to invest in customer through promotional offers. This last expense here with the promotional offers, that is a one-time thing that they essentially went through with Costco and Sam's Clubs. That is a one-time expense. They emphasized that during the conference call. When it comes to marketing, this is going to be a $15 million expense over 2021. And, in my opinion, I do think it's kind of unnecessary, to be completely honest. I think spending money in-store with potentially in-store banners, or spending a little bit more money to get a better kind of location when it comes to a fridge or something along those lines could be a better way to increase brand awareness. But, if it works, it works. If it doesn't, it's short-term profitability. It's all just short-term kind of noise when it comes to this non-profitability here in this quarter. $2.6 million in public company and new employee costs. So obviously they're a newly public company when it comes to the Tattooed Chef. They kind of went through a SPAC, a Special Purpose Acquisition Corp, back late year, and there are expenses with being a public company that they didn't have to go through back when they were private. The company expects operating expenses to decrease as a percentage of revenue over time. That's obviously a good thing. And they said during the conference call as well that they expect these operating expenses not to really grow with revenue, which is also a big positive. So as revenue grows, this expense should remain relatively stagnant. Net loss was $7.9 million compared to $5.9 million in the previous year. Again, primarily driven by that increase in operating expenses. And same goes for adjusted EBITDA. Now, I kind of drew this in blue due to the fact that short-term profitability doesn't matter, guys. What matters is the growth of the business and the growth of the top line. If they have to spend money in the short term to get there, that's completely fine, right? This is all just short-term noise. There are a lot of unprofitable growth companies out there. The Tattooed Chef is one that's kind of lingering in that profitability to non-profitability phase where, they're growing without actually spending that much money when it comes to their net income and things along those lines. So obviously this quarter was an outlier, but generally speaking, they are focused on profitable growth. Next here, the balance sheet. The balance sheet at the Tattooed Chef is phenomenal. Currently, cash and cash equivalents are at $185 million. In and around 15% of the company's total market cap is held in cash. Very, very minimal debt alongside that. Looking at their outlook, this is very important for any investors looking out to 2021. Revenues in the range of $235 million to $242 million, an increase of in and around 60% compared to 2020. Huge revenue growth. This guidance implies 50% year-over-year growth on the base business to $222 million and a $13 to $20 million contribution from one of the 2 facilities included in the Foods of New Mexico acquisition, which is expected to close in the near term. The revenue guidance excludes any revenue contribution from the second facility because it is not yet in operation. The company expects to update guidance again once production begins at the facility in the coming months. So when we talk about this kind of guidance here and added revenue from the New Mexico kind of facility here, This revenue, a majority of it will be recognized in 2022 due to the fact that they only expect this to get up and running in late this year, like right around Q4 is when they're really expecting to get this up and running. So just the fact that they already expect $13 to $20 million in revenue from potentially just a few months of operations is big and signals big revenue growth going forwards. They obviously expect a longer term this facility to provide $200 million in additional revenue for the Tattooed Chef. Gross margin in the range of 20 to 25%. They said they expect this to kind of stabilize within the year in this range. Adjusted EBITDA in the range of $2 to $4 million. This is down from the $8 million roughly they were projecting prior to the acquisition of New Food or New Mexico Foods. But again, the implementation of the business will cost money, and that's what we're seeing with this EBITDA. Capital expenditures in the range of $15 to $20 million. So, as mentioned here below, the company is in high growth phase. This is a time where the Tattooed Chef is investing in their future, and it's one of the reasons as to why I'm not worried that they're losing money at this moment in time. And as they continue to grow and as gross margins continue to expand, this will be a company, in my opinion, that has right around 10 to 15% net income margins on the bottom line. So that was the actual report, but now we got to take a look at the conference call, some of the highlights of it at least, to get some insight into how the business is actually doing. First and foremost, Sam Galletti, the CEO, started off by saying some remarks. He's saying they're continuing to exceed retailer expectations. This is big when it comes to new product kind of implementations into companies like Target, Costco, Sam's Club. Seeing retailer, or rather exceeding expectations within retailers is big, as it means that they're more likely than not going to maintain, if not continue to expand within those retail networks. Very big. Next here, he talked about the Foods of New Mexico acquisition. He reiterated that this is their first opportunity to expand into refrigerated items, which will be big from a total addressable market standpoint. They are expanding manufacturing through the acquisition of this facility and expanding into a new industry as well. So the next facility is actually a tortilla factory. Now, the company never actually finished the construction of this factory, which will allow the Tattooed Chef to only implement the machinery that they need as a business. Again, as a whole, they expect this whole acquisition to generate $200 million in annual revenue by around 2023, if not 2024. And keep in mind, they only paid in and around $30 million for this acquisition, a great move from management in my opinion. When we look at Costco, they officially completed a very successful program with the Acai Bowl that essentially gave a lot of publicity to the product. Looking at a company like Sam's Club, in the last 12 weeks, we experienced 10.8% growth in Sam's Club as a whole. That's huge. Not just growing the number of distribution points and retailers from Tattooed Chef's perspective, but actually growing within those. So as they continue to expand into Sam's Club, that is a phenomenal opportunity for them to continue expanding their revenue growth going forwards. When we talk about Target, this is going very, very well, guys. Obviously, we know that product sell-through at Target has been absolutely phenomenal. And from Sam Galletti's kind of words, he said that it exceeded both ours, so it exceeded both the Tattooed Chef's and Target's expectations. He's saying that they're experiencing extraordinary demand at Target, and that Target said themselves that this has been the most successful frozen food launch in the history of Target. Huge words. Those are huge words and really shows the potential that they have in Target over the longer run. They now have over 17 different products in all Target locations, and that number will most likely expand as long as the company continues to innovate and go forwards potentially to refrigerated products. Huge news, very successful launch in Target, and I think this is a big opportunity for them for the remainder of 2021 and beyond. The company is currently seeing major retail success and expansion not just to other retailers and other locations, but expansion within those locations by the implementation of new product lineups. Sam Galletti said that the company, the Tattooed Chef, is planning on becoming a generational brand and is laying the foundation for future success at this moment in time through the expansion into these different networks. They're currently ramping expansion production in Italy and California to keep up with the demand. Obviously, the acquisition of New Mexico Foods will allow for additional capacity that is needed when it comes to production. When we talk about new products, the Tattooed Chef had 42 different SKUs in Q1 and are planning to have 54 different products by the end of Q2. So within and around a 6-month period, they increased their total products by right around 25 to 30%. Huge growth. They plan to continue innovating when it comes to new products and have over 250 new product ideas, paired with 50 which belong to the Hispanic market. On the topic of profitability and EBITDA margins, the company expects EBITDA to grow sequentially quarter over quarter. So obviously right now we had an unprofitable quarter, but going forwards there may very well be a chance where we really start to see profits in potentially Q3 to Q4 of this year. Looking at 2021 growth and potential guidance, the company is guiding to $235 to $242 million in revenue in 2021. Now, what they really pointed out here is that they're going to update this figure once the second facility from the New Mexico Foods acquisition comes online. Once that happens, we'll get some more clarity when it comes to numbers, and that guidance will be updated. Next year, guys, we got the Q&A session, and this is essentially going through the different questions that the different individuals had pertaining to the Tattooed Chef brand, new products, new numbers. Some very interesting stuff was actually asked, so let's get into it. On the topic of New Mexico Foods, one facility is currently running, and by the fourth quarter, they're planning on having Tattooed Chef Hispanic products come out of that facility. Obviously, this expands into frozen, ambient, and snack-related products, two new categories for the Tattooed Chef to expand into. Now, when we talk about guidance, they didn't increase this number. Originally, back on their Analyst Today, back in 2020, they said $222 million in revenue will come to the Tattooed Chef brand in 2021. And essentially what they did here today was reiterate that and essentially add some from this new acquisition of New Mexico Foods, but it's pretty stagnant. Now, they said that it takes time for numbers to manifest and that they already priced in a bit of growth into something like a Target and Walmart, which they expected to expand throughout the year. And they also said that it takes time for these numbers to manifest. So let's say now we get to a point where we have 16 different products in something like a Target. We're only going to get a full year's worth of revenue from that actual kind of partnership and upgrade when it comes to Target in 2022. So it takes time for these numbers to manifest, and that's one thing that they pointed out. When it comes to margins, they were asked if margins might stabilize a little bit this year, as they have been jumping around quite a bit in prior quarters. The Tattooed Chef spokesperson said that margins will be within 20 to 25%, even with this new acquisition that they experienced, further proving that gross margins will stabilize throughout the year and won't jump as much as expected. Talking about Target, something very interesting that allowed them to expand a little bit earlier than expected. Earlier in the year, back in March, the Target had to do an emergency revision. Another supplier had an issue with manufacturing, and essentially what happened is Target went out to Tattooed Chef and said, hey, you know what? We have a spot for you guys. Why don't you just come in right now? And that accelerated the expansion phase for Tattooed Chef into Target. And obviously, the products are doing phenomenally at Target. They're now expanding into 16 plus different products there. So, phenomenal growth. And it's just kind of interesting how they managed to get in just kind of in the nick of time when another manufacturer was having a difficulty when it comes to manufacturing. Next, on profitability and operating expenses, the company said that operational costs will not grow with revenue for now. So we're going to see a bit of stagnation when it comes to operating expenses. And as revenue grows, we should see the profitability increase at the company. On the topic of inflation, they asked if it was impacting the Tattooed Chef business in any way. They said that they are seeing inflation manifest around them within new products and new product costs. The thing about them, though, is that they actually contract their prices for their different things on a one-year basis. So something like corn, which has risen significantly in price, is actually locked in for them for the next year. And they believe that potentially by the next 12 months, prices will stabilize within the commodity market, helping them decrease that cost of corn and other products down significantly. We also have to consider the fact that the Tattooed Chef is vertically integrated. This helps with a lot of costs as they grow a lot of their own food, thus helping decrease the costs, or rather not increase the cost of their food. Now, when we look at the actual report as a whole, I personally think that they actually did pretty dang well. The revenue beat on the upside is phenomenal and showcases the continued growth of Target. Continuing to see that expansion into new retailers makes me very optimistic throughout the rest of the year, and these short-term net income and profitability issues will go away with time. Nothing bad that I can say about it. The only thing that, I could put if I had to say what's one bad thing about this report, it's the guidance. The company didn't really upgrade their guidance for this year or next year. They said in and around $300 million in revenue for 2022. That's what they said back last year in essentially November to December. Why is that number not increasing? That is the only thing that I'm kind of skeptical about, as even next year we have to implement this new acquisition of New Mexico Foods. So why isn't that acquisition being priced in yet? And is this potentially them just sandbagging numbers? I personally think so. I could very well see a situation where next year revenues are upwards of 200, or rather 350 to potentially close to $400 million, as long as they continue to execute with this integration of New Mexico Foods, expansion into new product lineups, new stores. Phenomenal report. That's my takeaway. When we talk about the market and how they reacted as a whole, we'll see that the stock is down 2.5% after hours. Again, I think this is partially the fact that they lost money throughout the quarter and partially the fact that they didn't really increase guidance. Again, this is all short-term noise, guys. The company is executing on a very high level, and them not really updating guidance. They're a new company, so obviously I really think they're just sandbagging these numbers here when it comes to these expectations to set them up for nice beats going forward. So anyways, guys, thank you so much for watching this video. I really appreciate you being here. If you found any value whatsoever, please consider subscribing, liking, and dropping a comment down below on what you think about the Tattooed Chef moving forwards after this earnings report. Thank you all so much for watching, and have a great day.